7 popular TradingView indicators analyzed and scored, arranged from bottom to top performers. You'll see what makes each one tick and whether they deserve a spot on your setup. Smart Money Volume Index. Created by AlgoAlpha, this oscillator measures institutional buying and selling pressure by comparing smart money volume, negative volume index, against retail volume, positive volume index. The index is normalized to a scale from -1 to +1, making it easy to spot extreme readings. The indicator offers 2 display modes. Compare mode shows separate buy and sell interest lines, while net mode combines them into a single oscillator. The visualization includes layered columns that get more intense as the reading approaches extremes, with gradient fills that highlight high interest zones above 0.7 or below -0.7. Candle coloring reflects the current bias, turning green when smart money buying dominates and red when smart money is distributing. In actual trading environments, this works as a confirmation tool rather than a standalone system. Strategy options include using extreme readings as entry triggers when aligned with your primary trend system. For example, if your trend indicator shows bullish structure and the smart money index crosses above 0.7, that's strong confluence for a long entry. You can also use divergences. If price makes new highs but the smart money index is declining, it suggests institutions are distributing into retail buying, which is bearish. The concept of separating smart money from retail volume is interesting, and the normalization makes interpretation straightforward. The execution is solid with clean visuals and appropriate alerts. However, the underlying assumption that positive and negative volume index reliably separate institutional from retail activity is questionable. Support and resistance, and EMA crossovers with alerts. Built by Kiran Reddy 0929, this dual-purpose indicator that identifies support and resistance levels using pivot detection, while simultaneously tracking EMA crossovers for trend signals. The support and resistance calculation uses left and right bar look-back periods to find pivot highs and lows, with volume threshold filtering to distinguish significant breaks from weak violations. The EMA system uses 3 periods, short-term at 5, medium-term at 12, and long-term at 34. The visual signals include 4 distinct patterns. Uptrend labels appear when the 5 EMA crosses above the 12 EMA, and downtrend labels when it crosses below. Buy signals fire when the 12 EMA crosses above the 34 EMA, and sell signals when it crosses below. Support and resistance breaks get marked with small B labels, when accompanied by volume spikes above the threshold. Bull wick and bear wick labels identify rejection wicks that close back above resistance or below support. You can trade the EMA crossover signals as primary entries, using the nearest support or resistance level as your stop loss. Another approach treats the support and resistance breaks as entries, but only when aligned with the EMA trend direction. For example, taking resistance breaks only when EMAs show an uptrend. The wick rejection labels can serve as reversal signals or warnings to tighten stops on existing positions. The combination of trend signals and structural levels is practical, and the volume-filtered breaks add value. However, the indicator doesn't bring anything particularly innovative. It's a competent implementation of standard techniques, but without unique mechanics, that would make it superior to existing alternatives. Volume Channel Flow. This indicator was created by ChartPrime and combines trend channels with volume profile analysis. The system tracks price within dynamic bands calculated using ATR, automatically adjusting the channel width based on volatility. When price breaks above the upper band, the channel flips bullish and displays in lime green. When price breaks below the lower band, it flips bearish and shows in red. The channel midline serves as the trend reference point. What makes this unique is the volume profile overlay that builds within each channel period. As the channel develops, it calculates volume distribution across price levels and displays this as a horizontal histogram extending from the left side of the channel. The point of control line marks the price level with the highest volume activity during that trend phase. This gives you immediate visual feedback on where the most trading interest occurred within each trend segment. In real trading, this works well for identifying high probability support and resistance zones based on actual volume accumulation rather than just price action. The breakout labels at channel transitions help catch momentum shifts early. The volume profile is particularly useful for finding re-entry points during pullbacks. If price retraces to the point of control from a previous channel, that's often a logical area for the trend to resume. Strategy-wise, you can trade the initial breakouts when new channels form, using the opposite band as your stop loss. Another approach is waiting for the channel to establish, then buying dips to the lower band in uptrends, or selling rallies to the upper band in downtrends. The volume profile integration is clever and adds genuine value beyond standard channel indicators. However, the minimum length requirement of 10 bars means you miss information on shorter trends, and the visual can become cluttered when multiple channels overlap on busy charts. Impulse trend levels. Bosswaves built this as an adaptive trend system that tightens or widens its bands based on impulse freshness. The core uses EMA smoothed price with mean absolute deviation to create upper and lower bands. What's different is the impulse detection mechanism. When price moves sharply relative to recent volatility, the system registers an impulse and marks its direction. This impulse then decays over time using a decay rate, which controls how long the bands stay tight after a strong move. The visual includes a trend cloud that follows price, colored lime for bullish trends, and red for bearish trends, with retest markers appearing when price pulls back to the inner band edge. You can trade the primary crossover signals as entries, using the opposite band as your initial stop. A more conservative approach waits for the first retest after a signal before entering, which gives you better risk-reward, but means missing some runners. The buffer period before retest lines appear prevents cluttering the chart with signals during choppy action right after trend changes. The adaptive bandwidth based on impulse freshness is genuinely innovative and addresses a real problem with fixed-width channels. The visual execution is excellent with clear signaling, and the decay mechanism is well thought out. The main weakness is that impulse threshold settings require optimization for different instruments, and there's no built-in guidance for what values work best in various market conditions. GK Trend Ribbon. Swing Plus, Prepare, HUD. Gavin780 created this trend-following system, combining a dynamic channel with early warning signals for potential reversals. The core uses a zero-lag EMA at its center, with upper and lower bands calculated using ATR multiplication. The logic requires confirmed breakouts above the upper band or below the lower band, with additional confirmation bars to reduce whipsaw trades. The visual design features a filled ribbon changing color, based on trend direction: lime for bullish, red for bearish, and gray for neutral periods. The HUD banner at the top constantly shows the current market state, displaying either prepare warnings, confirm trend direction, or a neutral waiting phase. The confirmation bar requirement helps filter noise, though it means entering slightly later than pure momentum traders. In real trading, this works best on swing trading timeframes like 4-hour or daily charts where trends have room to develop. Strategy options include using confirmed signals as primary entries with stops placed at the opposite band. More conservative traders might wait for a retest of the ribbon after a breakout before entering. The Prepare Alert system is genuinely useful for traders who prefer confirmation watching over mechanical entries, and the visual design is exceptionally clear without being cluttered. The logic is sound with proper volatility adjustment and confirmation requirements, though it's fundamentally still a trend-following system that will struggle in ranging markets, despite the neutral mode filtering some choppy periods. Supply-demand zones. Created by Project Syndicate, this script identifies supply and demand zones using pivot highs and lows, then tracks them until price invalidates them. The detection uses swing length for sensitivity. Higher values create fewer but more significant zones, while lower values catch more potential areas. Each zone is clamped between minimum and maximum heights, based on ATR multiples. What sets this apart is the comprehensive zone tracking. Each zone displays its height in pips: creation session, Asian, London, or New York; age in bars, distance from current price; and a calculated strength score from 0 to 10. Zones automatically hide when they become too old, or when maximum zone limits are reached, keeping the chart clean. In practice, these zones work well as decision points for entries and exits. Fresh zones from key sessions with high strength scores tend to hold better than old, retested zones. The retest markers show you when zones have been challenged. Strategy-wise, you can trade bounces off active demand zones for longs and rejections from supply zones for shorts. Another approach is waiting for zones to break, then trading the momentum in the break direction with a stop just inside the broken zone. The zone management is sophisticated with smart merging, height clamping, and automatic cleanup that keeps charts readable. The strength scoring and detailed labels provide genuinely useful information for decision-making. The tracking of retests without creating separate signals is well executed. The only notable limitation is the requirement to set minimum distance between zones, which can cause you to miss valid levels when volatility creates multiple significant pivots close together. ORB plus key session levels. Created by Quant Crawler, this comprehensive system tracks opening range breakouts alongside multiple session ranges, including previous day high and low, Asian, London, New York AM, and New York PM sessions. The ORB section lets you customize start time and duration. Each session tracks its high, low, and optional midpoint, with extending lines and labels. The most valuable addition is the ORB trade signal system with 3 entry modes. Breakout mode enters immediately on candle, close through the level. Retest zone mode waits for price to wick back to the broken level before entering. Retest midpoint mode requires price to pull back to the ORB midline before triggering. Each entry includes automatic stop-loss placement using midpoint, opposite side, or fixed points, plus up to 3 take profit levels with customizable risk-reward ratios and partial exit quantities. The session levels provide context for where institutional order flow concentrates, with previous day levels acting as magnetic price points. The fair value gap detection adds another layer of confluence for entries. The higher timeframe bias dashboard analyzes market structure on 2 timeframes, showing whether recent swings are creating higher highs and higher lows for bullish bias, or lower highs and lower lows for bearish bias. The extensive alert system fires for every level break, FVG formation, and HTF bias change, making it suitable for semi-automated trading through webhook integration. The code quality is excellent with proper variable tracking and no repainting issues. The only reason it's not a perfect 10 is the sheer number of inputs and features can be overwhelming for newer traders, and the visual can become cluttered when all features are enabled simultaneously. As you can see, even the top performers only excel at one specific thing, and you need to run multiple scripts to get the whole picture. Trend direction, key levels, stops, exits, you name it. QR Pro does it all in one system, so you don't need to jump from script to script. Plus, it includes webhook-ready alerts if you're automating, and there's also a dedicated backtester available so you can check if settings are even worth using before placing any trades. Link in the description.